All right, we are live. Welcome to the Mapper Forward podcast. Welcome to the people who are tuning in, who are listening in, and particularly welcome to my two guests. We have Stephen Bannister from ECOM and Felipe Croce from FAF Coffees. We have an interesting 3 hours ahead of us, a discussion about the sea market and about coffee production and exporting and the relationship between all of those things. Welcome, gentlemen.
It's good to be here.
Thank you, Lee.
I want to start by saying I am, first of all, incredibly honored to have both of you here with me. This is history making this discussion for our industry. And I'm not only honored, but I'm humbled to be a part of this discussion. This is my intention for me for this discussion is that I want to learn from both of you, and I want to challenge both of you for things that don't seem to connect and make sense. I also want to invite you guys to introduce yourselves and lay out your intention for this. And we might start with you, Steve.
All right. Well, thank you, Lee, very much for giving me the opportunity to talk. I'm not sure whether I'm actually flipping onto the live screen or not, but anyway.
Yep, you're here.
Yeah, cool. So, yeah, my name is Stephen Bannister. I'm currently the Managing Director in Condesa Colab in Australia. Have been part of the ECOM group for almost 20 years. I think the opportunity to talk and to educate around what's happening in the coffee industry is why I'm here today, and really to continue to drive change with a world where we have a good amount of supply of coffee, but we have prices that are currently below the cost of production for many, many farmers around the world.
Great. And how about you, Felipe? Introduce yourself and tell us what your intention is for today's discussion.
Yeah, thank you, Lee. It's a pleasure to be here. For those of you that don't know, I am a coffee farmer in Brazil, based in São Paulo, and exporter. So we work with small family farms for Brazilian standards, about 200 farms. Personally, I grew up in Chicago. My father always worked in imports, exports, and I moved back to help my mom on the farm. And interestingly enough, the farm only came to my mom because of the last price crisis, which was 1999, 2000, and 2001, which my uncle was supposed to have the farm, was bred to run the farm, and didn't want it when the farm had taken under debt. So I happened to go back into farming, having grown up in the US, and I've been doing this for 10 years.
Cool. I do want to state before we get started that Ally Coffee was originally a part of this discussion and pulled out when they found out that Stephen was coming on this podcast. They have their own reasons for doing that. Their reasons that they gave me were that they just wanted to slow things down and would have to pull the pin. So the reason I'm saying that is because I feel this is the first of many conversations around a very difficult subject. This was triggered because of a video that was sent to me of a coffee farmer cutting down his trees in Brazil. And it went viral. And I started reaching out to people to start understanding what's going on. And Dean from Ally is someone who knows a lot of the history of the sea market. I reached out to him, and he was very eager to put together people who are knowledgeable about this, and he's a badass, and I wanted him to be a part of this, and for whatever reason they couldn't be a part of this. And I want to be very transparent about how we're moving through this. This is going to be something for those who listen to this podcast on a regular basis, that this is going to evolve into, we don't know what the fuck yet, over the next, I suspect, few years. We're looking at bringing on board an investigative journalist to start looking at this. This is the very first step in that. And so, Steve, the reason I really wanted to have a chat with you is because I have heard comments throughout, you know, particularly the last couple of weeks, of who's evil and who's not evil in the whole C market, in the coffee world, right?
Sure.
And the more I dug, the more I realized that none of this is as simple or straightforward as it seems. And there is no single silver bullet for any of it.
Look, I'd have to agree. I mean, the industry is far bigger than one company or one farm or anything. If we look at global production today, we're at 160 million bags, and we're across maybe 40 countries of production. So it's definitely a big world out there that coffee is today.
Let's start then with defining what the coffee supply chain is. And my intention with that is to help people understand that it's nowhere near as simple as a linear kind of supply chain.
Definitely. I mean, I think, and we have to start with people like Felipe at the same time. We have to start with the farmer and the complexity of how we pick coffee to get it to an export ready state that a miller can use it. It's not just something that is like a banana or anything else that comes ripe. We pick it and it gets delivered to a supermarket.
Mm-hmm.
Coffee is something that needs to be milled, and it needs to be actually milled twice, not just once. So there needs to be huge investments in wet milling and dry milling and everything else at an origin level before even anyone at a destination or a roasting country can have a usable product.
Right. So Felipe, let's even take that back further. I want us to spend the first part of this discussion really getting a solid foundation with definitions that we can build this discussion off. So what are the broader complexities? How does the supply chain work at origin level with regards to coffee growing and progressing through the mill and exporting and whatnot? And we should bear in mind that what you're about to talk to is just what happens in Brazil, right?
Right. At least that's where my strength is.
Yep.
So I'll refer to what I know.
Yep. Go ahead. If you could lay out how you get from, in very broad terms, but specific enough that people can get an understanding of following the supply chain from the farm.
Right. So coffee is a complex agricultural product, and it takes quite a lot of investment to start a production. It takes 3 years from planting to start getting a real crop, and it takes 7-8 years to get a mature tree in full production. So a lot of times there's heavy investments involved in credit lines that farmers have to access, and the decision of which varieties to plant can be and have been at times in the past controlled by the government or institutes as to what's planted, how it's planted, and even how it's sold. And that's been changing quite a bit recently with the oncoming of differing levels of quality-oriented markets, so what we call the specialty market. But in general, a farmer needs to finance a field 3 years until they get the first crop. And in coffee, in a way, flirts with death its entire supply chain.
It's very poetic, sir.
I like to tell that to my farmers, make it a little dramatic, because we try and compare it with wine, but very, very few farmers actually taste their coffee in a way that they know how to assess what it is, what the value is, how much they should sell it for, and then what they should be doing to change on the farm. So you sometimes have a whole system put in place of, like Stephen was saying, after picking, you have a whole science behind post-harvest. And that involves fermentation, drying, and then proper storage, milling, and then putting all these coffees into a quality assessment in a system that, you know, takes on 160 million bags and puts them into different categories of products. So historically, there's never been much information back to the farmer as to how much the coffee is worth, or what the coffee is, what they should be doing with the coffee, as opposed to just, you know, this coffee is it, in Portuguese they say it drinks or it doesn't drink. It has value or it has defects. And then they're put into systems based on how serious the defects are, and then due to that system they get a price. And so then the price, they're put into products, and then these products can be anywhere from, you know, hundreds of bags to thousands of bags, and then they're sold at these different. This is how historically coffee has been traded into, you know, sold as different contracts based on a reference of what's on the New York Stock Exchange market, and then each country may have a differential based on the New York Stock Exchange market. So,
all right, I want to stop you there for a second. I want to pull it just a little bit further back so that we can get it. There are people who are listening to this podcast who have zero understanding of that, and I want them to be able to follow along as well. So I'm going to ask you these questions and tell me if I've understood it correctly.
Sure.
So farmers grow cherry. They pick the cherry.
Yeah.
There are some farmers that sell the cherry as it is, and then there are some farmers that then process the cherry themselves to the first step of processing that Steve was referring to. There's 2 milling processes, and then there are some farmers that process it the whole way. Have I understood that correctly?
Yeah. So you have, at the very simplest of levels, you have someone who basically just tends to a tree, picks the coffee, and sells the coffee at that stage. And then you start the next step on the supply chain. And then you may have many, many steps in between, all the way through to the roaster or to the cafe. In Brazil, things tend to be a little bit more clear cut. They tend to be a little bit more transparent. And farmers are a little more professional, with often having their own post-harvest set up, sometimes their own mills, and in some cases, like mine, even export and sell their own coffee.
All right. Now, in there, just to demonstrate the complexity, Steve, if we were to look at that, we go to other origins, we need to insert the idea of a coyote in there, correct?
Yeah, definitely. So every country is completely different, and that presents massive challenges. But definitely where you have countries that have a more smaller farmer base, where the average farm is half a hectare or something like that, then generally you'll have a village collector or a middleman, and there might be a number of different layers of collectors through the supply chain that get to an amicable level. That might be due to reasons of transport, so the farmers don't actually have access to take the cherry to a wet mill, or they might be just people that are opportunistic and have a large truck that go around at the farm gate, pick up that cherry, et cetera, et cetera.
Okay.
And that can also be an accumulation point at a parchment stage as well. Because if you look at places like Indonesia, for Indonesia Arabica, for instance, where the actual farmers themselves will wet hull on a small machine. So they're already wet hulling their coffee. They're selling it as wet parchment, which is quite a different mechanism of trade compared to most other origins.
Right. So we introduced a couple of new terms in there as well that we haven't spoke about yet. We talked about wet milling, we talked about parchment, and we talked about wet parchment. So parchment as in dry parchment versus wet parchment. Which
Yes.
one of you wants to define what wet milling is and what wet and dry parchment is?
So, well, I guess wet milling would be the first milling that Stephen referred to. That would be the cherries the day they're picked, and they would go on to a drying phase until a stable moisture content, and then there's been increasingly new concepts of doing this, but basically it turns the product from a fresh cherry to what we were saying, dry parchment. And so there's less moisture content, and they can be sold at these two different stages at different values.
Right. And people may have heard of terms like demucilagination. It's taken me 2 years to say that word without having to stop in the middle for a break.
Apparently, it's really good in Scrabble.
I have to try that if I ever get time to play a fucking game of Scrabble. But this is the demucilagination. So it's the removal of the outside of the cherry and the mucilage and all of the layers in between. Correct or not?
Well,
that's correct, but you've also got to look at it from the point of view that we're using wet mills also for the first level of segregation. So we're using float separation to take defects and foreign matter and other things out of the coffee as well.
Okay.
Well, just to point here, you dry the coffee, you sort it into different products. So you may have unripes, and you may have, depending on the country and the way of picking, you may have a certain percentage that may be sold as high level coffee, a certain percentage that may be sold as lower level coffee. If you take the skin off or not, it doesn't matter. They're both the same product. So you can do it like a natural, for example. You wouldn't take the mucilage, you wouldn't take the pulp out. But essentially, what we're doing here is we're taking the product to a more stable, to a level where we can store it, where it won't ferment or it won't mold. We're making it a more stable product.
Okay, so that's the wet milling process, and then we take it to parchment, correct? So where we're going to, well, help me understand something here. And just to clarify, I've never been to Origin. I've never been on a coffee farm. Well, one that's got trees on it anyway. So this is, excuse my ignorance, but there are a lot of people that are listening to this that have never been to Origin, and I'm happy to be the person who's asking the dumb questions so that we all can get on the same page. So when you do the wet milling, what's the end product at the end of wet milling? You have a seed with parchment around it?
Right. So you have either a seed with parchment and skin, even the outer skin, or you have just the parchment, just the yellow parchment around it. So that would be wet mill down to 11%. There are differences between the different processes in terms of taste, in terms of density, in terms of what's going on a biochemical level. But essentially, we're turning this into a stable product. And then how about we call this the next step, the dry mill?
Right. Okay, so that's the next step in the supply chain. And then is that typically let's say just in Brazil, is that a separate business, or is that usually done the same place where it's wet milled?
I would say that 99% of the world, it's a separate product. Less than 1% of, and Stephen, you know, other countries, I would say less than 1% of farmers actually have their own dry mills.
I would tend to agree. You see a lot of separation of where you have wet mills very close to farms and everything else, because it's extremely important that the cherry is, I guess, put through the wet mill as fast as possible. If we're leaving cherry by itself for more than 24 hours, sometimes if we want to create a wash product, then fermentation and other things can start to already be present, and that creates additional huge challenges within the supply chain. But then you have probably larger scale investments that are dry mills that can handle a lot larger capacity in more strategic areas between, I guess, farmers and port or warehouses.
Okay, so we're gonna just stop it there with regards to the supply chain for a second, because I have some questions around that. Who funds all those? Let's just call them 3 steps: the cherry, the wet milling, and the dry milling. On a very general level, is the product being sold to different hands in each of those 3 stages in the supply chain?
It's a combination, I guess, in different things. If we look at us as a business worldwide, we've invested heavily into wet mills and dry mills so we can create the best product for our customers at the same time. But there's also, with the explosion of specialty and businesses that they want to have that personal touch, like Felipe's, and they themselves invested in their own production lines, wet mills and dry mills and everything else, so they can take care. So there's not one key step. I think in every origin there's a mix between investment being done by, let's say, commodity trade houses or exporters, and they might be large multinationals, they might be singly focused businesses within that country, or they might be businesses, again, like Felipe's, that have evolved over time and be able to create that investment to give their customers a differentiated product. Okay.
You said a term that I've never heard there before. What's a commodity trade house?
Well, commodity trade house is, I mean, it's your ABCD, it's your sort of to Daniel Midland's, Bunge, Cargill, all these large commodity trade houses. So you trade commodities, more or less.
So they are not people in the coffee industry, is kind of what the point I'm getting to.
Well, it's just a generic term. I mean, you could look at the top 10 traders in coffee worldwide and say we're commodity trade houses.
Okay. Who specialize in coffee?
Yeah, who have invested over a long period of time. I mean, us as a business have been in coffee for an extremely long time. Mm-hmm. So we've invested into the supply chain over that time.
Right. So you'll invest not only in you'll invest in the supply chain in order to increase the rewards that you're going to reap from that investment, correct?
Well, you're investing in the supply chain to make it more efficient, to drive value for your customers, because that's what your customers want, and to enable us to provide a more consistent product at the end of the day. I mean, as Felipe said, you sort of flirt through death, or I didn't quite get his comment.
No, you used it right.
Again, there is so many complexities with coffee, even to the extent of how you dry it at different altitudes, or how it interacts with its environment in different areas of humidity. If you're storing it at 1,000 meters versus sea level, it has an impact to the coffee. It has an impact to the coffee when you put it in a container and you ship it halfway around the world to your end user. You've got to make sure that the coffee is perfect when it arrives, because unfortunately there's many instances where we need to have coffee that's tasting amazing these days, and that presents so many challenges you wouldn't believe.
Oh, I would believe. I promise. I feel as though we are only just waking up to the realities of how complex this whole thing is. Do you both agree with that, or do you think that we've always been awake to it as an industry?
Oh, I think 100%. The buyers have never been so picky. They've never had such high standards, and we've never had so much quality as such an important driver of coffee. So I mean, you can get by with a lot of stuff when you're adding sugar, you're adding cream, you're roasting dark, and now with the general ways that people change their consuming habits, there's a lot of pressure into improving everything that you do, you know. But if I can go back a little bit
Sure.
on the last thing you were talking about. So we're talking about the first level of the supply chain.
Yep.
And these can be very expensive investments, especially for farmers, and expensive investments for anyone to get a good equipment, to get good warehouses, good systems going on. And so there's a lot of good work that comes from collaboration, but then there's also the first step of the line where in lots of places farmers may have very few options to whom to sell to, and so
when you say that, sorry, could you clarify that a little more? When you say farmers have limited people that they can sell to, do you mean dry parchment? Do you mean cherry? What do you mean?
Well, in all of the stages, especially in the wet parchment, they generally sell to one wet mill. But even in towns where they dry their own coffee, so sometimes you see the most success where farmers have several options, where there's more competitiveness going on.
Mm-hmm.
It's kind of general free market capitalism as well, where you have lots of competing companies competing at different options. You see farmers having a little bit more of higher prices and more decision making to be done.
And that drives quality, right? The moment that you do have a free market, competition is going to drive quality, it's going to drive price, all of those fun, delicious things that happen when you've got a free market operating in an area, correct?
Usually, not always. Usually.
What instances does it not, do you think, when it comes to the small ecosystems of coffee?
Well, funny enough, when the C market goes really high, that tends to drive quality down. So in 2011 and 2000, coffee prices went up to $3. There was a drive towards doing commodity and not doing specialty. So the market was paying super high prices, and so it didn't really matter what kind of quality you were doing.
Okay, we're going to touch on that kind of relationship in a little bit. We're not quite at talking about the C market yet. With regards to the steps that we've talked about so far and the coffee changing hands financially, and cherry being bought, and coffee being sold as dry parchment and wet parchment, who's determining the prices at those steps in the supply chain? Steve?
I mean, it's different across different countries. If we look at different examples, say, where you're going through a harvest period, generally the comment comes that cash is king. Whoever is paying the most money will get the lion's share of a crop at the end of the day. So whether that's an intermediary or anything else. Now, the challenges also that exist are when farmers are either pre-financed or pre-financed through different entities, then sometimes they're a price taker rather than a price maker. But every season that I've been in has its different dynamics. Every origin has its different dynamics. So it's hard to say there's a one definite answer of who creates the price. I would say today in a low market where we are sometimes fighting for coffee in a way that we're having to push price to buy in some of our origins today, because ultimately we need to get coffee in, and that's how you get it.
Is the C market something that at any of those very general spots in the supply chain, is the C market determining those prices at any of those points directly or indirectly?
Today, no. It's totally disconnected, and it's an extremely challenging market to trade. So you will use the C market as a hedging tool, but it does not determine necessarily the price that you will pay at any one point on a day for cherry or for parchment. We benchmark it back as a theoretical differential, but at the same time, if we need to buy coffee, we need to pay the market price in that country.
Okay. And we're going to define everything you just said in a little bit, because we're going to keep moving through the coffee supply chain. We've got dry parchment. Is our coffee at that point, Felipe, ready to bag and ship out for export?
No.
Something else okay, so what happens then?
No, so you have dry parchment. This could be separated into lots, or it could be into several lots. But essentially, this will be all screen sizes. Mm-hmm. This coffee needs to be assessed in a lab, whether it's a specialty lab or a commodity lab, and put into basically what we call a product, and give its value, and then it's got to be milled accordingly. So whether you're going to blend it with something else, or whether you're going to mill it 16 screen size and up, or 14, 15 and up, whatever you determine to sell this product as. And so from that, there is a different yield, and that's based on the region, the rains, the year, and how much the coffee has been, nutrition has been fed to the coffee. So the price may vary based on the yield as well. How much?
For anyone who's listening that doesn't understand what Felipe means by yield, he just means how much coffee there is. The yield of the crop.
If I was to buy 100 bags of parchment coffee, how many bags of exportable grade would that give me? And that could vary quite a bit from region to region or from year to year. And I don't know how it depends on different countries, but generally there is a reference to the C market as to the value, the calculation of the value.
How so?
Well, if you were to sell to a local buyer or to a cooperative, they have the price of the day. Okay. And the price of the day is, I guess in Brazil, there's a differential based on, there's a Brazilian price of the day. And so the coffee would be bought on specifics, but it's based on the price of the day. Unless this is like a differentiated product, like a quality-oriented product, then you can tie this into a higher value.
Okay, and so the price of the day, let's speak just specifically about Brazil for a second, that is correlated to the C market?
Yeah.
Okay.
Yeah.
All right. So then after it's been through that milling process, then it's ready for export?
Yeah, so then it would be bagged and stored, and then you have, this depends on the country. So Brazil is quite straightforward. I've been to Kenya before, which is a straightforward country as it goes for Africa, but it's a lot more complex. And then you may have a government controlled system or orientated system where it has to go through different marketing branches or an auction or some kind of system in order to be sold. But essentially, you would send samples to an importer, and you make a contract, and then you put it on a ship and send it out.
Okay. Is it at the point when it's ready for export? Is that when people from white countries all over the world start coming to origin and start cupping the coffee and being like, I want this lot and I'm going to pay this much for it? Is that when that happens? Or is it before that?
Yeah, generally buyers will come towards the end of the harvest, so that they can already cup fresh coffees. And the buying strategies have changed a lot over time. People used to hold on to coffees a lot more, but generally it's done towards the end of the harvest.
Okay. We've just spoken about Brazil and the back end of the supply chain up until the point where it's going to be exported. None of that was straightforward. And the reason I wanted to go through the exercise of us going through that is because that's a very simple description of a country where coffee production is more straightforward than most other origins. And it unto itself is still complex. If we go and take this to just look at the different coffee growing regions in Africa, the complexity is going to be different again. The same with Central America, the same with other places in Indonesia and whatnot. The point of us going through that in relation to this discussion is to help point out and to demonstrate the vast complexity of the coffee supply chain, and we haven't even started exporting the coffee yet. And that's an important thing for people who are listening or watching this podcast to grasp, because if we are going to look at how we're going to understand the clusterfuck that is this whole thing, we have to appreciate where it stands, and we have to let go of this idea that we do get it, because until you've spent like PhD level time exploring all of this, I don't know that there are many people who understand the depths and complexities of all of this. To the extent where the back end of the supply chain and the front end of the supply chain are very discombobulated with regards to what they understand about each other. The conversations that I have had over the last week with coffee producers trying to get their heads around how not rich cafe owners are, they were shocked. They were completely shocked and surprised that people who own specialty coffee shops don't drive around in Rolls Royces. So this is not just a thing where the people at the front end of the supply chain don't understand what's going on with the complexity of origin. The back end of the supply chain are quite shocked about the realities of what's going on at the front end of the supply chain as well. And this is the kinds of things that we want to explore moving forward with this episode of the podcast and onto future episodes of the podcast. Now, Steve, at this point, when the coffee is ready to export, is this, when people talk about the C market, is this the product at this stage that people are looking at tying that price to?
In a way, yes. But I just like to go back a step and think it's really important to highlight that from the cherry to a green bean stage, I think there's probably 101 ways now to get from A to B, with all the different innovations in processing and different ways in specialty in different countries and everything else. So we've touched on one instance, as you said, that's Brazil, but there is myriad of complexities there. So if we look at the C market as a contract, it is a contract denominated in green bean equivalent coffee. So yes, that's when it becomes something that is, I guess, can be leaked and technically deliverable against that contract if one would want to do so.
Okay. So now let's start talking about the C market. Could you define, and we're going to go through a bunch of definitions here, and then, so how this conversation is going to progress for the next little bit, we're going to define what the C market is. We're going to define some terms around what that is, things like hedging and differentials and shorting and all that fun stuff. Then we're going to talk a little bit about the history of it and how it came to be and why it came to be. And then wherever it takes us, so be it.
Right.
So, and remember, this is not an interview, this is a conversation. So go, Steve, tell us what the C market is in as least complex terms as you possibly can.
Right. Okay. I think just before we do that, it's important that we differentiate two things. The first thing is that coffee is both Arabica and Robusta. It's not only Arabica for the fantastic people, and there's some great Robusta coffees out there as well. The C market is the futures derivative contract related to Arabica. It's traded off the ICE exchange in America, predominantly in New York, I believe. And it's a contract that's denominated to 37,500 pounds. So whenever anyone buys or sells a contract, they're actually making a decision to either purchase from the exchange or deliver to the exchange coffee to the equivalent weight of 37,500 pounds.
Is that relative to a container? Is that a container load?
It's pretty close. So you're looking at a contract is basically 17.01 metric tons, where a container is generally shipping around 19.2 metric tons. So it's very close.
Okay. So to try and demystify what you just said, a contract is written when a trade is made on the C market. A contract is written to purchase a minimum of 37,500 pounds.
Well, one contract is 37,500, so it's not a minimum, it's an actual.
Okay, great. Thank you for the clarification. So does that mean if somebody wants to purchase double that, they have to have two separate contracts?
Correct.
Okay. So who is this person that is writing or asking for this contract?
Well, the exchange is anonymous. So for a transaction to happen, you need a buyer and a seller, and the exchange matches those two people. So if I'm buying or selling a contract for risk purposes, I don't know the counterparty on the other side. The counterparty for me is the exchange.
Okay. And Felipe, jump in here with questions, because this is, you and I both are learning from Steve here. So go ahead and jump in with questions if you have them.
Sure. I'm just gonna say I've never worked on a differential before. I've never sold coffee based on the C market. So I know very little bit. I know how it works and a very little bit about it, but our whole business is based on specialty.
Right.
Yeah.
Right. And so, so when you say, Stephen, that it is So it's anonymous.
Sure.
There's a buyer and a seller.
Yes.
Does that mean that the person who is buying doesn't know what they're buying?
Correct. So if we are to look at the contract in its entirety, you have a number of different grades that you could tender to the exchange. I think it's important to note, though, that futures contracts, whilst they are technically a deliverable to a certified warehouse, much more of the industry today is using them as a hedging tool or a risk mitigation tool, much more than a physical deliverable.
Okay, what does hedging mean for those who don't know?
So hedging is utilizing a transaction where you're taking the different risk sides. So if I'm buying coffee and I'm long coffee, let's say, or I have a lot of coffee, so I have 37,500 pounds of coffee to make it easy. Then I can sell that coffee on the exchange. So I know today what I've bought, and whatever the volatility in the C market is, I can hedge my exposure. So whatever future volatility happens, then I'm hedged. I've bought one side and I've sold the other. And us as a business, we look to basically trade the difference between where we buy and where we sell. So we're a business that really only makes cents per pound. At the end of the day, we're not taking outright risk or anything else. We're protecting ourselves for price volatility. And it's important to know for the C market itself that it is a no limits market. So it's not like other commodities like cotton or anything else that have a daily range in their futures contracts. New York can do anything any day. It could go from 100 to 0 to 300 back to 100 in a day. It's theoretically possible.
When you say 300, those numbers, contracts, is that what you mean?
No, I mean the actual value of the contract itself. So today, the value of the contract is, say, around 90 cents a pound. But I mean, I guess through Felipe's time, he's seen 40 cents a pound and 300 cents a pound, even though his prices are not completely connected to the C market itself. But there has been a huge amount of volatility over the price of coffee over the last 10 years.
Okay. So we understand that the C market is a mechanism for buying and selling coffee.
Yes.
We understand that there's a buyer that decides that in the future, they are going to need to have this quantity in lots of 37,500 pounds
Yes.
of coffee purchased. What parameters can they select or determine within those contracts? Can they choose the origin and can they really?
So if you were to take delivery from an exchange, say you are buying coffee from the exchange, you receive the lots that you get allocated. You can't denominate, I only want Brazil, or I only want Honduras, or I only want this sort of coffee. That doesn't happen. It's a bit of a more anonymous thing where it's a first in, first out system in a way, and when you tender or you receive a tender from the certified warehouses, you do not get to choose the coffee that you get allocated.
I did not know that. Did you know that, Felipe?
I didn't know that you couldn't get down to a specific origin. But down the road from my farm is the biggest co-op in the world, and they process about, I think, three or more million bags in two different mills that are right next to each other. And so basically, from what I understanding, what Stephen was saying is these coffees, they get cupped and they get put into categories based on lack of defect or how many defects. And then when you buy a future, you buy a grade. And so the coffee goes in, and then the day you want it, as soon as a farmer delivers his coffee to one of these warehouses, he can't get it back. It goes into the system. He can get back something similar grade, but that goes into a system where traceability is gone, basically.
Okay. So, Stephen, when, let's say I want to buy a contract.
Sure.
Just one, because buying more than that would scare the shit out of me. But I buy one contract.
Yes.
It's clearly going to be for the future. Do I get to determine the date of when I'm going to take ownership of that?
Yes. So generally, your contracts for coffee are traded on. They have cover months, so they trade through the year in March, May, July, September, and December for coffee, Arabica. So you have some are 2 months, some are 3 months. In Robusta, everything is 2 months. So there's a little bit of an anomaly around the second half of the year, just to spell that out.
And so what do I get to determine about my contract?
So you get to determine the price, and then you get to determine the future months. So if you go, I want to buy a Brazilian coffee today, you would probably look at a December contract, because that would give you coffee that you could use to price shipping in October, November.
So that's how you get to pick in a roundabout way what your origin is going to be?
No, you just use it in that way because that's when you would allocate it. So if we look at both sides of the transaction, say if I'm a farmer or I'm an exporter and I want to mitigate my risk, so I'm buying coffee and then I'm selling a future on the other side, so I've got my hedge, let's say. And then for me as a destination, then you start to sell your coffee. So you're the exporter again, you sell the coffee and you buy back the future in a way, because your transaction is complete. So you're always hedged within the transactions that you're doing. It's very much like debits and credits for accountants. Let's say you have to, from a hedging strategy to manage your risk, you're doing both at the same time. So whenever you're buying coffee, you're selling futures. Whenever you're selling coffee, you're buying futures.
Who does this? Is it people who are specifically trained in trading who do this? Is it people who are in coffee that are doing? Who is the person that is buying and selling these futures?
Well, this is a risk management strategy based on every commodity has this. So cotton has this, wheat has this, oil has this. You can look up, there's a gazillion different pork bellies, orange, frozen concentrate orange juice. There's
they all have their version, right?
This sort of stuff. And it's all to facilitate trade at the end of the day, to ensure that when somebody wants to buy or sell coffee, there's a market. Because the most challenging thing we have today, if there's 160 million bags of coffee being produced worldwide and every farmer wants to sell that coffee within a certain period of time since they've picked it, there needs to be able to be a market for them to do so. If they're at the mercy of purely an unregulated market where we need a roaster to be present at the origin to buy on that day, then that might not happen. And then that coffee might go to waste or everything else. So there needs to be mechanisms to be able to facilitate trade on a daily basis.
And so by what's happening today with regards to the physical aspect of coffee being traded, not the contracts, that's already been done beforehand to facilitate that mechanism that you're talking about. So that once it's ready to go, that was already traded months ago.
Correct. So you might have a lot of roasters, for instance, that thought that $1 per pound coffee is very attractive. So they've gone and bought futures saying that they can use to allocate and price set for the quality that they buy later on at the same time. So people are looking to, I mean, if you look at a roaster, we're looking to understand and give ourselves price surety for the product that we're putting into our roastery.
Right. So a question on that, can you buy a fraction of
No,
a future? You have
no.
to buy the whole contract.
I mean, you can in terms of these little like
conglomerates or groups can come together.
Yeah, there's things where you can trade, but they're not necessarily a risk mitigation tool. They're more, let's say, an investment tool where people want to be long commodities as an investment rather than as a risk mitigation tool. And I think this adds now to the complexity of any agricultural product that's traded on a futures basis or anything else, is that there are other people trading these for investment purposes today. So that becomes a challenge in itself.
And is this futures trading something that, is it a mechanism that came about purely because of that supply chain issue of making sure that there's coffee ready to ship and people have already bought it once it becomes available to ship?
Well, it was to give power both to the farmer and not the consumer, but say the
buyer,
the roaster or the buyer at the end of the day, so they can make decisions with surety that they're going to get supply at any point in time that they feel like it.
Okay.
So
go ahead, Felipe.
It's in short as kind of a question, but it's a way to minimize risk based on supply and demand, based on the market, right? So
correct.
Okay, that's a good time to start talking about, I guess, supply and demand, because right now the C market has been for some time now not doing very well. Help me understand, is that purely because we have too much coffee in the world?
I think today, if we look at our own numbers, we're at a oversupply state. And I think sometimes we're predicting that demand was growing faster than it actually is. If we look at, as you said, that cafe owners or first world economies are not always doing as fantastically as we all believe they are. I think in a way, and I've been looking at this in my own destination market, that the only thing that's actually creating value for cafes today, and I'm sure they're doing lots of other things, and this is not the only thing, but one thing that is definitely helping is the falling price of coffee, because that's the only input to the majority of people's business where the actual coffee is becoming cheaper. But we can't look at coffee or the C price of coffee in isolation, because there's also the huge impact of currency fluctuations and everything else. So in Australia, for instance, the C market's been falling, but the buying power of our Australian dollar is falling at the same time. So the local market is not always seeing super attractive pass-ons, because once we're translating the US dollar denominated price into an Aussie dollar, it's not as cheap as it was, because our dollar's been trading down at the same time. Similarly, if you look at the challenges in Brazil from a currency point of view, that we have, it's fantastic, right? The currency has sort of been going the other way. I'm getting more reals for my coffee today. But on the flip side, every other input that they require for their farm has been going up. Fuel and other things have been insane. So it's this double-edged sword where we can't look from a destination point of view only at the C market, because we have to take currency into account as well.
Is currency the only other thing that you're taking into account with regards to all of that? Is that the only other mechanism there?
It's not the only one, but it's definitely the biggest driver.
What are some of the others?
I mean, the main other one is more or less just time and financing and access to financing, because money at a global stance has been, let's say, cheap from an interest rate point of view. If we look at interest rates in America, it's cheap, but that's changing. That's changing quite fast over the last couple of years. At the same time that there's been this creep up in interest and the cost of financing and everything else as well.
Okay. When we see the C market where it is today, it's at 90.42 the last I looked.
Yep.
I want to make sure that I ask this question the right way. Does that mean that every futures contract that's traded in the moment that it's that price, that's what the coffee they're buying per pound is? And I guess this is where I want to start talking about differentials. What that means.
Well, I mean, if we look at the currency market last night, it closed, the futures market, it had probably a 2-cent range. So it depends when people traded that contract. The price that we see today is the close. So people could buy better, people could buy worse, depending at what time they bought.
If I go to the core of that question, I want to ask who ultimately sets the price of the contract? The buyer or the seller?
Well, they have to match and agree to the same price. So it's an electronic exchange. So you're having people put bids and offers in simultaneously, similarly, like how a share market would work, whether it's the FTSE or the New York Stock Exchange or anything else. So in order for a transaction to happen, you need two people through the electronic platform, both wanting to execute at the same price. So the market sets the price.
Can you take me through, on a dumbed down version, what that actually looks like? You go into your screen, you decide you want a contract for 90 cents per pound. Then what does the system?
So you can go through a screen, or depending on how you do it, you will be interacting with a broker, say, that is executing those orders on your behalf. So say we're on different sides of the planet, which we are. You're wanting to buy, I'm wanting to sell. You've rung up your broker and said, I'd like to buy one contract on July, New York Arabica for 90 cents a pound. And your broker puts that order in. So it's sitting there waiting to be hit. I'm on the other side, so I want to sell at 90 cents today. My broker puts that in, and the two hit up and match.
I appreciate you putting it that clearly. Thank you.
Just multiply that by thousands and thousands of transactions that are being done on a daily basis.
The kinds of people who are buying and selling that are buying these contracts, something that really struck me was to try and get my head around what 160 million bags of coffee actually feels and looks like. Like, that's an astronomical amount of coffee. And
yes.
That's just Arabica, right?
That's both.
Arabica and Robusta?
Correct.
On this, didn't we say that Arabica is only traded on the C?
Yes, but
Okay.
160 million bags is global coffee production.
Okay. So when we're talking about these contracts on the C market, we're not talking about your local boutique roaster that's buying, 100 bags a year of coffee. We're talking about the Nestle's and the Starbucks of the world, correct?
We are talking about both in a way, because for your boutique roaster to get coffee to them, it depends how it's been bought and sold before it gets to them.
Enter the importer.
And the exporter.
And the exporter. Is that right?
Correct.
Okay. So let's pick up back at the supply chain then. So Felipe, you're an exporter as well as a producer. But you're an exporter in specialty only. Is that correct? Do you move any commodity coffee?
No. I only do specialty.
Is there a difference between the way that specialty coffee is exported and commodity coffee is exported?
Yeah.
Can you tell us the differences there?
Sure. So I guess we start with the assessment of the quality of the product. So a commodity exporter or mill would generally just separate the coffees into categories that are there's a language that's not based on the actual taste of the product. It's just based on if there's defects or not. So the coffee is generally roasted very light. In most cases, they cup 10 cups or more. There's many times not even a specification of roast profile or how much this coffee rests. It may go straight from the roaster, straight to the grinder and be tasted. And then there's a cupper may cup thousands of coffees a day and put these into different categories where they will be sold into the commodity market, linked into different price points based on so it could be a good cup, a fine cup. It could be a coffee with a serious defect, like a Rio coffee. And so I'm pretty sure, but I think all of these coffees would be sold 100% on the C market, be all on most of these guys would hedge, I believe, 100% of what they do to try to minimize risks.
Can I ask you there, Steve, what's the relationship between the contract and the quality?
Well,
and by quality, sorry, let me specify what I mean by quality there. What's the relationship between the contract and what the coffee tastes like?
Zero.
Okay.
The contract is purely a risk mitigation tool or a trade facilitator tool. What happens then is you're creating an additional price that is above or below the C market contract to then reference the quality or the cup or the, let's say, specifications of the coffee in relation to what the customer is looking for.
Is that what a differential is?
That's correct.
Okay.
So differential is benchmarking your C market price back to a range of different qualities for marketing purposes.
And who sets the differential? The person who, let me let you answer that. Who sets the differential?
I mean, if we look at different origins, there's been sometimes traditional differentials where qualities are traded. However, today, I would say the market sets the differential because a lot of places we're below cost of production. So our differentials today are increasing sometimes dramatically in some origins because origins are not selling coffee below a certain price. If we look at countries like Ethiopia, for instance, where there's a Sidamo grade 4 quality. Traditionally, it was trading at a negative differential. You can only generally buy this coffee flat price today because the market will not sell anywhere near a negative differential related to a historical market.
Okay. I guarantee you a lot of people listening to what you just said glazed over. So I'm hoping, well, and the reason I say that is because a lot of this is new language for our industry. It's stuff that we haven't paid attention to before. And if you are listening to this and that's the case, listen again. You know,
it's new language to people that want to learn, and I think they do want to learn, but there is a huge industry where this is common language at the same time.
Absolutely. And from the people that I've spoken to that work in cafes, whether they be specialty cafes or non-specialty cafes, a lot of the huge workforce on the front end of the supply chain have no fucking idea what we're talking about. And these are the people who we want to start educating about this for a myriad of reasons. Not just because we want attention onto this, but because we want to open up their understanding of where their careers might be able to go if this is something that interests them and they naturally have an acumen for. You know, this is all of that as well.
I'd like to just say there's a whole other language at destination that I've been learning over the last 3 years, which is equally as interesting and challenging. So it depends where you're coming from.
Is that Felipe's language?
No, it's the language of, I guess, from roaster to customer and everything else. This side was completely foreign in a way to me. You just order a coffee. But understanding how complex it is actually to serve a coffee beverage and getting more complex these days is also a really exciting evolution that we should go through and understand, as I said, the complete supply chain, not only from the origin side or the supply chain side, but the destination side as well.
Yeah, which is really interesting because that side of things is like second nature to me. But I've spent 15 plus years on that side of it. So that language to me is like, well, I don't know why you find that challenging. But then on your end, you can't understand. I mean, I'm sure to you, it's like you're spitting out all these words. It's like, but they're really easy words. I'm like, no, bro, this is totally new to me. And I'm not an unintelligent woman by any stretch, but at the same time, if new is new, your brain needs some time to get its head around this stuff.
Yes, definitely. I like the analogy of coffee that you never, ever, ever stop learning once you start to get into this industry. It's just you keep learning.
I feel like this is one of those industries that, you know, all the wise people say, the more you know, the less you realize you know.
Yes,
this
definitely.
is absolutely the industry that puts you front and center to that philosophy. And I feel as an industry, we're just starting to realize how much we don't know. You know, it's Steve, I've said to you a couple of times over the last week, I don't know what I don't know. And I need you to help me through this conversation, realize and notice what I don't know.
Yes.
I can teach you about cortados and all the front end of the supply chain very easily, but you don't know what you don't know in that side of things either.
Exactly. And I think that's the fantastic thing of creating opportunities like this, that we can debate every side and educate others at the same time.
And to that, the reason I'm asking Felipe for you to go through so many of these little intricacies around the producers end of thing is because I've never been to Origin, and I've never understood what it is to see all these processes happen, and having an appreciation, particularly over the last couple of years, of how much I don't know when it comes to this stuff has been incredibly humbling. And then coming to realize, actually, it's not just me. There's a lot of people who don't know what they don't know. And we have to start being okay with the fact that we've got a lot to learn from all of these different perspectives of the supply chain. And there's a long period of education ahead of us. But in that, we've got to find a way to stop farmers from cutting down their trees and committing suicide and doing all of these things that my research has been uncovering. There was and I was telling you about this, Felipe, earlier today. There was last week in Milan, there was a conference sponsored by, I think it was funded by Bayer. Actually, it's called Seeds and Chips. And it happens every year. It's in its 4th year. And they were talking about the suicide rate of farmers currently across all of agriculture. And it's the highest it's ever been in history. And this is really concerning. It's because of all the stress that's being placed on agriculture right now. And the comments that I've received from farmers and people working in coffee producing regions, the anxiety and stress that they're experiencing is horrible. The financial stress. Felipe, we were talking about when the C market drops this low, this is when farmers tend to go into a lot of debt. Is that right?
Yeah. 100%. I mean, I'm talking every day to people that, you know, before they even say hello, they're just like, do you know what the market's going to do? Like, you can
Really?
see that you can see that they're very, very nervous. Everyone's, we're having a workshop here for 60 farmers tomorrow. And I'm positive that everyone's going to want to talk about the price of coffee. So, you know, I think that it's a huge and massive challenge to move 160 million bags around the world, and we need people that you know, we have this commodity system it's feeding the world, that's bringing grains all around, but maybe there are. I mean, it's not. I wouldn't say it's perfect. There's some issues there. And so, you know, the thing about the farmer anxiety is that you have a product, a business that its nature is long term. You're dealing with planting things. The returns come after a long time. You have huge amount of risks, which are becoming bigger based on nature, and your price is very short term. It can switch really quick. In a week or whatever, and that can bring a huge amount of stress, and it's not at all related to the work you're doing or to the cost of what you're doing. So I think that there's just, at the farmers, there's very little protection to what they're doing, and you know, there's the C market. It's the futures. It's, as we've described, it's been great to minimize risk for the exporter, for the importer, for the roaster. So I can hedge. I'm not gonna make as much or lose as much, but I know more or less where I'm playing. And an exporter that works in this kind of system, that they're hedging all that they're selling contracts, and they're delivering, and it's sort of a more or less keeping your risk very low. But what that happens is, you know, if I go to a coffee show, SCA show, I sell a bunch of contracts, I come back, and the farmers want to sell. What I tell the farmers is, oh yeah, the market's paying this much. That's true, and that's not true. That's true as in my market, my contracts are paying this much.
Independent of the C, correct? The specialty.
No.
Is that what you mean? Or you mean on the C?
That would be on the C. So if I'm hedging, if I'm selling, even if we create these brands, right? If we create Fine Cup, if we create, I don't know, the Colombia Supremo. I think Colombia took it off this year, they took their coffees off the C market. But if you create a sort of a line and you create a differential to it, you're selling it based on the C market. But maybe that coffee could be sold better. It could be sold, you know, it could be tasting better. It could be sold better, but there's a specialization in treating that product and selling it higher, where I think lies most or some of specialty, maybe not all of specialty, but that is more linked to the reality of the farmer and the reality of that coffee. the traceability and the reality of that coffee. So a lot of this stress is coming from a total disconnection of what's happening on the ground and what's happening in the New York C market. And then when you take away from price, I mean, this system, I tried to look up where it came up, but I got as far back as a few examples, but 18th century Japan or Holland or something, or, you know, the rice markets. But, you know, there was a certain amount of people in the world. Now there's 7 point something billion. Pretty soon there'll be 10, 12. When you take away from price, and when you're only looking at price, you got to take away from either labor or quality, or you got to take away from the environment. That's what happens to farmers,
or all of the above.
Or all of the above. Or, and then in the worst case, you lose your farm, you lose your business. And so, you know, this puts some serious strain on the world in terms of, I guess, the health of the farmers, the quality of the product, the nutrition value of the product. And as we're seeing more and more, you know, we're totally polluting soils, polluting water. So this, maybe there's a room to question this disconnection from reality. You know, these external costs that are not into the system. How do we bring that into this system that we're just moving tons of product around?
So what you're saying there is that there's a disconnect between, correct me if I'm wrong, there's a disconnect between the reality of what's happening on the ground and the number that this product is being traded for. And if, I guess, there wasn't this kind of screen between those two things happening, there might be more influence on the price if the people that were trading these contracts had an understanding of the reality of what farming was costing, both financially, environmentally, and the human cost of that.
Well, the system, as I understand it, it doesn't really care either way.
Is that right, Stephen?
The system doesn't care, or?
Yeah, I mean, well, is it right that the way that this C market is set up, it's not meant to take the human factor into account, or the realistic goings on the ground, on the farm, to the planet? It's not designed to take any of that into account or care about it.
Well, I think we as participants within the market have to care. I mean, at the end of the day, for a trade to happen, there is a buyer and there is a seller. So for whatever reason, that person on the other end has made a choice to do that. If they're doing things that are not within the ethical guidelines or anything else of the way that they want to manage.
Can I stop you on that one? When we're saying that the person who's selling on the other end, is the person selling on the other end intrinsically connected with the farm? I think we established that they're probably someone that's not connected to that farm.
Well, it depends why they're selling. I mean, they can be, they may not be. If you look at us as a business, we're continually selling contracts because we're buying physical coffee. Mm-hmm. And that's coffee that a farmer or a producer or a middleman wants to sell at that time and has agreed a price that we've offered.
Right.
So that's one example. Now, there is a myriad of other examples of why people may be buying or selling at certain different times at the same time. But if we look at the principle of why the contracts exist, they're to mitigate risk. Now, at times when we're in markets like this, where the market or the price of coffee is so cheap, it doesn't mean that that's the price that is actually being traded for the coffee. There's a differential related to what's being bought and everything else. So the contract that itself is a risk tool. It's setting the price, or there's a price underlying related to it, but it's not the price that the coffee is actually trading at.
But it requires the intention of the person that's doing the buying and the selling to want to connect back to the integrity of what's going on.
Trying to process that for a little bit. But I would say we all have to have integrity in what we do. I mean, we shouldn't be buying or selling, or for us as a business, utilizing these tools if we don't have that.
Let me put it in a different way. In the conversations that I've had with you, and it's why I wanted to invite you to have this conversation, I've been super impressed with your intention behind what you're doing, and the things that I've heard a lot of the people that work for you, and a couple of them have been on the podcast, Ollie and Mookie, you know, stand up fucking humans that I've come to call friends because of the way that they do things. And when I look at the intention behind how they connect what they do to the quality the quality of the outcomes that they want to see happen throughout the supply chain, not just for the people who they supply coffee to, but the people producing the coffee.
Yes.
The quality of the intention that's there elevates the supply chain.
Correct.
Right? Is that translatable to the C market? Is the same intention required by the people buying and selling, especially when they both seem to be disconnected from the actual farm? Is that intention required in order to elevate that transaction, those contracts, and the outcome of that transaction in order to better the experience for the farmer?
I think the intention always has to be there. Whether the intention is there for every participant on the exchange is another whole thing that I am unable to answer. Right. I can answer from my own point of view and say that we want to create I hate the word, but win-win scenario where everyone within the supply chain as having a positive impact on the transaction or moving coffee from the farmer to the roaster at the end of the day. So I can answer for myself. I can't answer for everybody that has a futures account.
Is there a mechanism within the C market that regulates to prevent the farmer getting fucked over?
No, I think the only thing he can do is not sell. As long as he...
And this is not I'm not taking a dig at anyone. Again, we're here to understand. We're here to get an understanding of what this is. This is not, we're not attacking anyone. We're not targeting anyone. I'm trying to understand.
100% with what Felipe is saying. We've seen that in Brazil, and we see that in Vietnam and a number of other origins where farmers will hold out for their right price, or the price that they see value in selling. Now, again, the C market is a reference point, and a farmer or anyone else needs to decide to buy or to sell, and that will enable a trade to happen and to be able to hedge that trade, let's say. But is there a code of conduct or anything else that you're saying?
Yeah.
No,
that's exactly what I'm asking.
Farmer or whoever is making a transaction has to choose, in a way, rightly or wrongly. They have to choose. And I think you've seen in a number of origins this continued strategy since the market's traded below 150 cents for people to wait. And one of the biggest challenges that we see is people waiting for good times, and those good times are not necessarily happening, which then compound the problem that we see today. So we have people holding on to coffee. We're building larger and larger supplies of coffee worldwide because people are waiting for the right price.
I think what I meant by it doesn't care, the market doesn't care. I mean, it just, using Stephen's words, it's just a tool of trade. It's just a mechanism of of agreeing upon a contract between a buyer and a seller.
Right, but the tool's being used by humans, and the tools can be swayed, right?
No, I don't think there's no quality when you're talking about just a futures market. There's no, like we said, there's no traceability. So I think that transparency is sort of one of the key things that
Right.
has pushed the small but growing direct trade market, which is you can actually trace this back, and you actually know where this comes from.
Right. And so what you're saying, and this is a question, not a statement. So is what you're saying that the accountability mechanisms, well, that's not the right word either. The mechanism isn't in place to ensure the integrity of the whole mechanism isn't built into the C market. That's what the other system that exists is for. Is that what you're saying, Felipe?
Repeat that again, sorry.
The C market doesn't have a built-in system as a part of it that really gives any fucks about anyone involved in it. It's purely just a buy and sell mechanism that has no accountability or traceability within it.
To my understanding, it's a way to facilitate trade. Mm-hmm. And so it actually protects those that are buying,
that are engaging
in it, that are not. The problem is when you're subject to sell into it, when you don't have a choice. The problem is when you're the seller and you have to sell into it because you don't have another choice. If you're a willing participant in it, it's a way of minimizing risk.
Right, but let's talk about the willing participant versus the person who's forced into it. The willing participant is usually somebody who is quite wealthy, or a farm that's quite wealthy, has the financial breathing room to be able to be a freely willing participant into it. Is that correct?
Yes, in most cases, but potentially you're a farmer who has very low costs. And so where this system inevitably, it doesn't differentiate between if you have 1 hectares in Kenya or if you have a million 100,000 hectares in Brazil. It doesn't differentiate between any of the cost of production. And so inevitably it's going to reward whoever is bigger and whoever is more efficient. And now I'm not against efficiency. I'm not against economies of scale. And I think it's kind of funny when baristas say they get excited about these super automatic machines they have, but then they want their farmers to pick by hand. So, I'm not against that, but in a world that we live in today with politics and lobbying the way that they work, there are not always fair playing fields. And there's no one regulating this.
Is that true? Is that correct, Stephen? Who regulates the C market?
The market regulates the C market, I guess. I mean, it's important to say, and this is probably my favorite quote, and it's not related to the C market, it's related to all markets in a way, but I'm not sure. So, someone in New York told me this, I think, but it goes back to a philosopher or something, where the market can stay irrational longer than you can say solvent.
Yeah, wow.
So I think that's an important thing, and that's the dynamics of potentially where we are today, where the market is theoretically an irrational price. It's below cost of production for a lot of people. And where is it going to go from here? Well, we have to look to supply and demand as a driver for markets in the future and say that what's going to happen ultimately is, as you've seen, supply will get reduced because people can no longer afford to participate and grow coffee. And then as supply reduces, demand will continue to grow with our global economy. And then the price will go the other way, and we will have probably 300 cents a pound.
Do you think that it's going to repeat itself? This is cyclic, right? So this isn't doing anything new. This has happened before.
Correct.
And a lot of people are saying to me, this has happened before, but this time it's different.
No.
Sorry.
You go, Felipe.
Sorry, I didn't mean to interrupt. But no, it's no different than, well, there's one difference than the past. I mean, the last was 1999, 2000, 2001. It lasted 3 years, and it went down even a lot lower.
40 cents, didn't it? Or 42 cents, is that right?
Yeah.
Yeah.
And so I know a ton of farmers that are in debt till today from those harvests. But there is a somewhat of a specialty coffee scene now with roasters willing to support their farmer partners, which, I mean, I don't want to say it didn't exist, but it wasn't.
They have an out. There's an out from this system, right?
Yeah, people who've put in the work to develop relationships into specialty coffee, and I mean, there have been direct trades in the past, even as back as 1900. But we have a solid market now, a solid specialty market with roasters that are actually walking the walk. But sometimes it's hard to differentiate between those that are and those that aren't.
But if we stick with the C market thing, the thing that I'm hearing people say is that things like climate change are causing new coffee growing regions to become present. With China entering the market, with Brazil having bumper yields. Wait, that's an Australian term. I have to stop doing that. Great yields. I get these messages from people that are like, but you seem to talk too many Australian things that most people don't understand. I know you live in America, but you'd still talk too much Australian. So there are Brazil having really great yields year on year with no idea of if that's going to stop for who knows how long. With technology being something that is presenting itself so that it starts to help us continue this growth rate of supply. That's what I think people mean when they say it's different this time. We don't know if we're actually going to see shifts in the supply of coffee. Is it inevitable that the supply will decrease?
Well,
you go, Felipe.
Stephen, go ahead.
I mean, I think for me, looking at it from a large scale point of view, yes, because today farmers cannot afford to put the right inputs into their crop to have great yields. And I think that itself is a really worrying thing that we're facing today.
But isn't that just the small farmers? Correct me if I'm wrong. I don't know.
Yeah, I think that it's a cyclical thing, but the landscape changes. So if you were to analyze the ones who are able to add huge volumes in a short period of time are the big farmers, the really big guys. They're able to plant big fields, and you see more and more farms owned by investment groups, and not necessarily from family farm or single farmers. They're people that sometimes are far away from the farms, and they're planting, huge amounts of coffee. There was, the landscape changes. That there was the last number published by the Brazilian CNC, the National Coffee Council. There's supposed to be something like 300,000 coffee farmers in Brazil, but a study done by a different company in Veritas, which is a company that's verifying the entire coffee growing world, which is more, I believe, is a little more precise, is actually Brazilian farmers around 270,000 farms. So what you see is a decrease in small farms and an increase in big farms. So yeah, in the short term, I see volumes going down, prices going up, and then the cycle happening again. But you see a less amount of smaller farms, and so by treating them all the same, that's where the big guy is always going to win. And I want to bring this back to, you asked us a question before what's our intention for this conversation?
Yeah.
So I was thinking about it, and somehow my whole thing is I want to sell sustainability. I want to sell coffee that's high quality, but I want to help these farmers become more sustainable. You know, and we throw this word around very easily, but we always say it's a three-pronged thing, and a lot of sustainability measurement systems today that you see, they don't actually take price into consideration. They take social and environmental into consideration. But it's, you know, how do we bring, you know, do we sell these coffees? Do we come up with new differentials? Do we come with regional cost issues? Should we be selling everything, all of coffee? Should we be selling it as one thing? That's sort of my question, because you know, we can keep pushing forward another 20, 30 years. We can keep production. We can grow production of coffee. Brazil has a lot of land that can produce a ton of coffee and substitute areas in Central America that's going down. But you know, what does that mean for our what kind of coffee, and what does that mean for our earth, that you know, in a place where, what I meant by things not being so so transparent is that, you know, we have all these external costs that aren't taken into consideration. We have a country like Brazil that's seems like every week approving new agrotoxic chemicals and new things. So it's I mean, how does this tie into price? It's like you have to keep pushing away from sustainability, which is something that it seems like a bad idea for us as a, you know, as a human species.
Right, but the mechanisms under which coffee is being traded, from what this conversation has revealed to me, which I'm sure you both already knew, the mechanisms under which the majority of the coffee is traded in the world doesn't take that into consideration, right?
No.
It requires the human element that participates in the mechanism that is the sea market to care about the costs to the planet, the cost to the farmer, the cost to everyone involved in the supply chain, which it doesn't actually have a direct link into or a tie into in any way, shape, or form. Stephen, is that correct?
I would say no, in a way. It's not correct. I think the mechanism for all coffee being traded is purely the price. It's not the sea market. Sea market is a reference point to create price, but it's price at the end of the day. And I think the more that we can continue to engage stakeholders and consumers to value sustainability and what's being done, then we as a business, or we as a supply chain or an industry, can continue to create and change things at an origin level. It's sort of, I guess, again, a horrible term, but chicken and the egg sort of thing,
Right.
of whether we want to spend the money today and then prove to the consumer that this is a better product. And we as a business over, I think, the last 20 years have invested huge amounts of money in agronomists and farmer training and everything else at an origin level, because we believe that sustainability has to be a key pillar of our business for the future.
But again, that's the human element that's separate from the mechanism that is the C market, correct?
That's correct.
Right. So it requires your intention to be set that way in order to drive that alongside the C market, but not as a mechanism or a part of the mechanism that is the C market.
I mean, I suppose we could add rules or new derivatives, right? We could use the system. Okay, you know, an organic coffee should be traded at a higher differential, or small family farmer, a regional thing.
Well, a good example of this in a way is what the Fair Trade certification has done. So they've set the minimum price for things to be traded through their brand or their certification. So that is something that is trying to create a different price mechanism, or create a price mechanism that works for the origins, to create a minimum price. Now we're seeing that replicated in a number of countries now, trying to bring in minimum prices because of the total disconnect between where their coffee is being priced at by a consumer versus where it could be, or how do we look after our farmers and our internal coffee industry as a country. So there's been some very large decisions being made at the moment, and I think there's more to come if we continue to see low prices.
How long do you think these low prices are going to last? I mean, I know you don't have a crystal ball. I know that nobody knows.
If I knew, I'd be sitting in Hawaii and I'd be... but no, I mean, I think it's a very, very tough thing to say. I mean, for me, sitting in Australia, it doesn't make a lot of sense where we are today. It doesn't make a lot of sense when I visited farms and could see things in Mexico 2 weeks ago. And I hope that we can continue to go through this. But at the end of the day, we are an industry and there's big weights of supply and demand and everything. And today, everyone can buy coffee. There's no willingness for the price to actually change today. There's no driver to say that things need to change. It's almost like we need to have an event to create change, in a way, whether that's education or a conversation or something much more dramatic that you never wish on anybody or anything. But I think that's the point where we are today, that there's lots of supply, there's lots of availability of coffee as a whole. Now that changes when you go down to an origin level or a cup level or a specialty level. But as a whole, coffee is there and readily available today, which is the challenge.
Are there some origins that, I guess this is a silly question, but I'm going to ask it anyway. Are there some origins that are seeing an uncharacteristic low yield of coffee that doesn't seem to be recouping itself anytime soon?
Yes, and for different reasons. I mean, I think one of the most challenging countries still at the moment is Costa Rica, with substitution of coffee land for other things, be it development or anything else. So the price of Costa Ricans is astronomical at the moment, but it's continually used by a lot of roasters around the world. So there's the demand there. But I think you've emerged from a point of view where we've gone through coffee rust and everything else over the last 5 years, where you're seeing a number of new, stronger trees come online, which is helping coffee production in a lot of Central American countries at the same time. Felipe?
Yeah, I think you see there's annual reports on who's growing production, who's going down in production, but I think the ones who drive change are the consumers.
Who do you define it? You mean consumers of the green coffee or consumers of the roasted coffee?
The final consumers.
Okay.
The roasted coffee. So, you know, these kinds of things that you're doing, and any little thing that pushes, it's going to push even the big guys. You know, the specialty is growing and connecting with people, so much so that people are starting to know the name of their farmer. And I think that there's a big difference between that kind of work and bulk work.
How so? You know, tell me more about that.
Well, there is, I think it all comes down to traceability. And so traceability is linked to the humanity aspect is involved when you know who you're dealing with, and you look to doing repeatable business. And so that allows for more elements. You know, fair trade, like, you know, fair trade is a good example. It's done a little bit, but even in times like today, their minimum price is still below cost of production for a lot of farmers. So, you know, there's a difference between where generally specialty is operating and the final consumers. I mean, no company can get your dollar unless you give it to them. So,
which is quite simplistic, though, right? Like, if we want to say that, I mean, from talking about the back end of the supply chain as well as the front end of the supply chain, that's absolutely correct. But different constraints are going to mitigate what makes you let go of that dollar.
Well, the fundamental difference, as I was saying, is like a consumer has options. And sometimes the farmer doesn't have options. It doesn't have options who to sell to, how to.
Right.
You see, the interesting thing, like in Brazil, with a local market starting to happen, you get roasteries coming up. Now you see prices going up because farmers are able to sell in different directions, and there's a local consuming market. But you have places in the mountains, like where I am right now, where the cost of labor is higher than anywhere else in the world, maybe except for growing farms in Australia. But you know, we're still, for the rest of farmers in Guatemala or whatever, they all look at us as the big guys, as the massive guys. So the little guys and the mountain guys in Brazil are getting hit really hard. So there's no distinction. There's no traceability. There's no distinction. So the more that and I think even the big guys are having to start to look into this and go this direction. So,
you know, when you talk about it that way, when you talk about the end consumer and they vote with their dollar, essentially, you know, they get to choose where they're spending their money. The challenge in coming up with some mechanisms that we can help the front end of the supply chain at least get exposed to what's going on is challenged because a lot of them don't care.
Well, we need them to care because
right.
they're the only ones who could make any serious difference in the world in a capitalist system. And unfortunately, the producing countries are in a very complicated political state, and the ethics are questionable in terms of the governments. And so, you know, whenever businesses happen, you have in theory, government can regulate whether things are getting out of control or not, right? But that's not going to happen in origin countries. There's no, whenever two parties do business and affect a third party, like, for example, the use of glyphosate causing cancer and all kinds of stuff in a town, there's nothing's going to be done in it. You see it happen, like I think recently in California. You know, a janitor or a few people have been granted, you know, big payouts because it's been linked back to diseases caused by certain products. But I can personally show you lots of examples of cases that could be made here, but these things they won't get anywhere. Any of these claims, these protests, they'll be shelved somewhere. There's a lot of other complications.
Well, corruption is the number one mechanism in play there. You know,
yeah.
that's a huge part of this conversation that I don't really know. There's no one place that it fits. You know, there's different degrees of corruption. There's the very subtle kinds of corruption that happen, if you can call it corruption, whereby the mechanism of the C market doesn't care about the real life human aspect of coffee farming, and all it cares about is the wins that it's going to make from the way that it trades coffee. And, you know, there are arguably a lot of people out there that are celebrating what's going on with the C market right now, because while they're trading on the C market and it's this low, they're fucking cheering because they're buying really cheap coffee into the future, and they're able to know that they're going to make great wins from this, right?
Yeah, inevitably there's a roasteries probably making a lot of money because they're not putting their sale price down. Their input, their product is gotten half the price. But what I'm talking about is, yeah, that's going to happen. But I think it's the final consumer has, and it's hard because the final consumer is so fickle, but they're the only ones that have the power, and they should have the responsibility to become aware of you know what they're buying into, because it's, I mean, for us at Origin, we're don't have much
sway,
you know, faith,
influence,
sway or influence or faith into how you know, especially in Brazil, if you see what's going on with the government, and you know, you look at, they even help, they even make things worse. You know, you see what happened with the meat industry, with the big players using government money to buy out the competition.
And that's the more overt, more obvious kind of corruption that I'm talking about that exists. Like there's different levels of corruption that exist. This goes to the heart of why I created the campaign #ThisIsYourCoffeeFarmer, because there's a disconnect between what's happening at Origin and the cost of production of coffee, and the end consumer of that coffee having an understanding and appreciation of what they're drinking, and the fact that it's a commodity product and an agricultural product. I surveyed a ton of people that just live in San Diego and spoke to them about their awareness that this coffee was grown by somebody. Would you believe only a small percentage of people actually knew the coffee came from a tree? I can see both your faces. That is the reality of what we're dealing with. They don't even know that it's come from a tree. That's the disconnect we're dealing with, people. That's why I created the campaign #ThisIsYourCoffeeFarmer, where people actually put a face to the beans that they are selling, so that people can very obviously know that a human was responsible for growing this the same way a human is responsible for growing a banana. That's the challenge ahead of us.
Yeah, and that's really bigger than people can understand, because that goes to the heart of what is, to me, really the only thing that can make a difference, and that's traceability, and that's transparency. So, and that's what is a big challenge of the way the C market works. Is, I'm not going to say it's impossible, because a lot of times you can operate where you know where you can operate even on differentials, but you know your farmers, you know where things are coming from. It is possible, but it's rare. Most of the time in commodity grains, it's sort of, you know, the word commodity means that there's no differentiation. It's just all sort of the same thing.
The thing is, I feel like please, gentlemen, correct me if I'm wrong. The C market isn't meant to account for traceability. The alternative method of relationship buying was created because the C market doesn't have accountability for traceability. Is that correct, Stephen?
I mean, definitely point number one, and similarly back to Felipe's point, where it's a commodity. It was never designed for traceability or anything. Actually, the opposite. Your counterpart is the exchange. You don't know who your exchange is. If you deliver coffee, it doesn't mean to the exchange, it doesn't mean that you will get back that same coffee or anything else. You might get something completely different. So definitely in terms of the evolution of the industry, and if we look at the amount of people walking around SCA this year in Boston or anything else, people are looking for, how can I have or understand my supply chain better? How can I tell my consumer that their coffee has traveled through a safe process, so when they consume it, they can feel comfortable, and the brands can feel disconnected from all the myriad challenges of, I guess, changing laws and everything else that we're seeing in America. So, I mean, I think that's where we as an industry participant really try to continue to create value. And if I look at my time in Australia, I think the percentage has increased year on year on year of what we've been trying to do to create a meaningful link and repeating link between the farmer themselves and a roaster, because then we can make sure that value is traveling all the way down and we can get the best price we possibly can for a farmer.
Mm-hmm. I want to talk now about the cost of production and the cost of the C market. If you guys feel like this is the right time to do that. I had an interesting proposition put to me, well, a statement to me by a coffee farmer in Panama. He said to me, I need someone to help me understand how I'm meant to compete with the C price if a coffee that's scoring 79 cents if a coffee that's scoring 79 is selling for, at the time of that conversation, it was 87 cents. And then a coffee that's scoring 84, I want to sell it at 350 as a specialty. How am I meant to justify that as a specialty coffee farmer? How am I meant to justify that relationship to my buyer?
Well, I mean, it's extremely challenging. And I think one of the biggest challenges that people have from an origin perspective is that they don't always consider the variety of options that a roaster has, because not only are they competing at a $3 Panamanian scoring at 84, but I can buy a Mexican, a Colombian, an El Salvador, and a Nicaragua that the roaster is considering at the same time. So he's got to be able to create a meaningful relationship with a roaster. He's got to create a product that is able to create differentiation for his roaster within the market, and he's got to deliver something that's extremely meaningful. I mean, I think the challenge within specialty coffee today is 84 points isn't really that exciting anymore at the same time, unfortunately. Right. And don't get me wrong, it's a fantastic cup of coffee, but the continual expectation of roasters and I want something amazing and find me means that we're cupping through hundreds and hundreds of cups of coffee, whether it's at origin or destination, to be able to find that perfect coffee that delivers not only diversification but also value to the roaster. And an 84 cupping Panamanian coffee is probably not delivering value to a roaster today versus the substitutions that the roaster has to pick from.
And how does he or she compete with the C market then? Because people keep saying, you know, the specialty market is independent of the C price.
I don't think you are, but the biggest challenge is the elasticity between specialty and commercial today, where if we were trading at a $2 market and you're paying $3 for a Panamanian, the difference in price is sort of palatable. If it's 250 cents today, the roaster is just like, my accountant just says no sometimes. Unfortunately, it's too much. Like, go out and find a coffee for $2 or so. This is where huge challenges exist now in specialty, that the price gap between a regular commercially traded coffee and a high commercial or a specialty is so far apart that it becomes, again, very challenging for people to want to buy that for their business.
But it's not even necessarily the gap between the higher ends, like the 89s, and the special and the commercial coffee, that seems to be causing a problem for farmers. The challenge that I'm speaking about here is the ones where you're talking about where the scores are much closer together and the price gap is much further apart. So when you're talking about an 82 or an 84 versus a 78 or a 79, technically they're in different brackets, but the price gap between those two doesn't seem to be as justifiable.
Well, I like to tell my team, I like to tell my farmers and my team that there's no such thing as an expensive product. There's only products that won't sell.
Elixir drinkers beg to differ.
I mean, you can push the limits, but the only thing that expensive is as long as people don't give it value, so it won't go off. It won't go off the shelf. So the challenge in specialty is always going to be to create value, to sell an experience or sell something, a romance or a story or new taste or something that people value. So that's, in essence, I think, a way that we're going to have to shift the way we deal with our supply chain, is that we need to differentiate between, if we're going to survive, if we're not huge, if we don't have the lowest cost, then we need to differentiate ourselves in a certain way. So people have come to expect their wines to cost different prices, you know, if it's from Portugal or Italy or France or Australia or California. And we need to make it easier on the consumer. We need to make it a way that they can understand why something costs the way it does, and I guess build brand. And if you're in a expensive to grow area, then you better be good. Because in 84,
can't be an 84, right? So
no, I mean, you can't be an 82 and 83. You can almost be an 84, but it's really, really hard. Because the bigger areas are getting better at making 82s, 83s, and 84s. So that's what I tell the farmers, is how much more can I pay you for this? when the market is flooded with this. So we need to connect with people on a different way. It's like, well, do you want to buy from a farm that doesn't have a single bird or bee or bug or anything, or do you want to buy from a farm that is in harmony with its nature and with its community? So that's another element that people might get touched on. Or should we differentiate your taste somehow?
The consumers who care about how many bees there are on a farm, and I'm speaking just very frankly here, the people who are drinking, okay, let me say it this way. Nescafe are selling 6,000 cups of coffee, not Nescafe, Nestle are selling 6,000 cups of coffee per second. The people who are consuming, and that's a real number, it was spoken on this podcast by somebody from Nestle.
I'm feeling over-caffeinated already.
6,000 cups of coffee are sold by Nestle every second, 24 hours a day. The people who are consuming that coffee give zero fucks about the birds or the bees or the sustainability of the soil that's on those farms.
Well, I wouldn't say that that's entirely correct, but at the same time, we're just not willing to put a dollar figure on caring today. I mean, we've been used to buying a product off a shelf or through a cafe or anything like that. But I think we can't generalize humanity as saying we don't care. But there isn't a mechanism today to enable us to care.
And that's the next point. That's what I was driving at is, Felipe, I want them to care. I want them to give lots of shits about why, you know, you need organic farms like FAF coffees, you know, why things like that are important for the viability of the planet and the soil and the fungus and the microbiome that's in the soil and what that means long term and how that translates into the long-term agriculture of that farm. I want them to care. But like what Nestle was saying to me, and I'm not in any way defending anybody or pushing their agenda, this is just for the sake of us understanding what we're up against, the idea that people who are buying, let's say, Nescafe Blend 43, they're not necessarily buying it because they wish they could afford to drink an 89, a cup that's scoring 89. It's purely economic reasons that they're buying Nescafe Blend 43.
Well, let me play devil's advocate here a little bit. Again, the consumer has the power, and they're making these decisions, and you can see that more sustainable brands and coffees are growing, especially in Europe, Northern Europe. You see power mechanisms starting to change. I read somewhere today that there is a Dutch company, I believe, a Dutch green company who was approved I want to say something like a $400 or $500 million loan based on being more sustainable.
When you say green company, you mean green coffee company, or you mean sustainability? Okay.
Yeah, so you see banks starting to change their way of assessing how they give their loans, based on, you know, the principles and the values of how you do business. And Nestle bought Blue Bottle, which is the epitome of sustainability. It's the brand that has brought on, I mean, it's one of the biggest buyers of organics. It's one of the most sustainable and high quality and most ethical companies in the business, and Nestle bought them because they're aware more than us of where the market's going. You see government policies, especially in France and, or is it Germany, whatever, starting to ban a lot of products. And you
what
know,
products you mean?
Well, like there's the rules are becoming more glyphosate.
Kind of okay.
Glyphosate, agrotoxics. There's a whole new system to approval of organic products into Europe as of last year. There's like way more tests going on, and So, I mean, there's a new generation coming along that does give a shit, you know? Maybe in 10 years from now, it's going to be different. But I know that the big guys are scared to shit that their brand image, you know, could be hurt by what people are saying. So it's a daunting task to change a huge, 160 million bag system, but there needs to be tweaking to it, and there's it's got to be done on the ends. It's got to be done on the consuming end, and those of us in between, we need to be more transparent so that we can help the supply end, the farming, the farming end, and give it changes and come up with new creative ways of marketing, regional costs, whatever it is. And we shouldn't be telling farmers to grow coffee in areas where they're going to be subject to failure.
I'm not a conspiracy theorist. I want to preface this question with that statement. Is there, and Stephen, I think this is aimed at you, is there some sort of as far as you can see, is there some sort of an agenda to wipe out the little guy?
I don't think so. I mean, I think we need all the coffee, and within different countries or anything else, you can't wipe out the small guy. If you look to an amazing coffee producing country like Papua New Guinea, where land ownership is tribal and everything else, big corporates simply aren't going to come in and create massive farms or anything else like that. So I don't feel that that's necessarily the way. What we have to enable, though, is to give farmers the best opportunity to access price and access markets. And I think within my own business, we've seen an evolution year on year and a growth of creating meaningful supply chains between the roaster and a farmer. And this might be a farmer that's completely outside of my corporate network, let's say, but I'm enabling and utilizing my infrastructure to give the roaster access to that farmer. And they can do that. It can be more efficient. And by creating that efficiency, we can deliver the farmer a better price.
And that's through the specialty mechanism, right?
Yes.
The relationship buying. Could we talk about Hawaii for a second? Do you guys know very much about what's going on in Hawaii with regards to that?
I've never been and don't know, so I'm maybe not so helpful here.
Oh,
No, I don't know.
And shout out to Madeline here. Madeline, who has been on the podcast before, reached out to me and told me about some of this that's going on in Hawaii. They're quite an enclosed, and I'm not a specialist. I don't know a lot about this, but I do think it's an important one to bring to the table and discuss. So Hawaii is quite a closed system in the sense that, what's grown in Hawaii is typically sold in Hawaii, and it's consumed there as well. And a lot of people have tasted Kona coffee. No, it's about $25 a pound green. It's expensive. It's mostly owned by the farms down there are mostly owned generationally and long-term coffee farmers down there, and it tends to stick within the family. Recently, a hedge fund has purchased a huge block of land down there and grown, I believe it's somewhere in the order of 1 million trees. It's a huge number of trees. What does something like that speak to? What's the perception when something like that happens? They're the only hedge fund down there at this point. Go, Stephen. I can see you're ready.
I'm not quite ready. I mean, I think it's a very, very bold statement to do as a business. And I think whilst coffee is attractive and it's $25 a pound and it's really expensive, it's that for a reason, because there's meaningful estates that are generational and there's only so much of it. So if you come in and you try to potentially commoditize something that's specialty, it's a bit like going back to your Panamanian farmer, where you're trying to compete in the wrong markets. You're trying to do something that is totally disconnected, because you can see that all my coffee I'm going to be able to produce at $25 a pound. Well, that's probably not going to be the reality.
No,
and I really worry when people have these sort of huge visions, because specialty coffee and consumption and purchasing of it is amazing, but it's still only a fraction of the larger industry. It's still built on relationships and everything else. And those relationships have to have substance and everything else behind them. And I'm not saying that this would not do that, but if you give a roaster the opportunity to buy something, whether it's Felipe's farm, which is generational, or some of the people in Hawaii, that's a much more interesting value proposition to a roaster than a corporatized vehicle.
Felipe?
It's a bit tough, because it's a bet based on a brand, and Hawaii is a brand. I've had Hawaiian coffee. I've had some great Hawaiian coffee.
Mm-hmm.
You know, I think I've scored 187. Really, really nice coffee. But as you said, the prices are very high. So the price is more linked on the brand Hawaii than it is on the cup score, more than anything else. So it's testing. I mean, if you're going to influx a huge supply of this, is there a market for that much Hawaiian coffee? And then if what's going to happen is it's going to push price down.
That's my concern.
Yeah. And so, you know, it's a small example. It's an island example of what happens in the world when there's big hedge funds investing in gigantic. 1 million trees is a lot, but it's not that much when you're talking about what hedge funds are doing in Brazil. So, you know,
I can't even get my head around that, to be honest with you, what you just said. That's 1 million trees is not a lot in Brazil. Like
it's a lot, but if we were to apply this to Brazil, the numbers would be much bigger.
Wow.
So does it push out the little guy? Does it reward the big guy? Yes, as much as economies of scale does in terms of factories in general. Mm-hmm. But my main problem is like, how are you producing this? You know, like what methods are you producing this on a sustainability level? That's I think like what in the near future we're gonna have to make some serious tough calls, and as to start, you know, banning certain methods of production. That might be another conversation, but I think like there needs to be a differentiation. As for the little guys not to suffer so much, there needs to be more differentiation in the way coffee is sold.
When we talk about the little guy and the way that coffee is being sold, this is a really great opportunity to talk about what it actually costs to produce a pound of coffee, and the short-term cost versus the long-term cost. And I'm purely speaking financially here, okay? So the short-term cost may be, let's say, for just very broad terms, let's say it's $2.80 a pound, right? And that's going to change drastically based on origin and the quality of the coffee and whether it's mechanized or not, a whole bunch of things. But just on a very general, for the sake of this example, the very short-term costs, if we're just going to talk about cost of goods, to produce a pound of coffee, let's say it's $2.80 a pound. But that's not really the only costs of producing a pound of coffee, is it? Like, we've got the long-term, the idea of the risk that they're carrying and how long they have to carry, the loans that they have to take before they get paid. These are things that I was completely unaware of before the recent couple of months. The times, Steve, maybe you can help us understand, if you buy coffee on the C market, when is payment delivered for that? Because it's different. It can be negotiated, right, in the specialty world.
So if I look at ourselves as an origin, if I buy coffee, I put cash down on that day and I get it generally. So
on the day that you receive it?
On the day that I receive it or approve it into my warehouse, you're generally taking title to the coffee by paying for that coffee.
Which can be months later than when you bought it off the sea, right?
Well, again, the sea is just so we're not buying. For me as a business, I don't buy anything off the sea. The sea is just a pricing mechanism.
Okay.
Again, so let's make that clear. If I buy coffee, I'm going to a seller, whether that's a farmer, a middleman, a local agent, an accumulator. They will deliver me coffee to my wet mill or to my dry mill, at which point I will pay cash or transfer them the same day. That's generally how it works in the majority of
That's origin. At origin, though.
At origin level. So right. If I'm buying as a importer,
yes,
I'm buying it free on board an ocean-going vessel or a container vessel halfway around the world. So if I'm buying coffee out of Brazil, I'm buying it free on board on a boat in the port of Santos, for instance. Now, that's still 40 to 60 days away from Australia before, and then I've got to unpack that, check it, everything, make sure that the coffee is still perfect, hasn't been damaged.
There's no mold, there's no
mold, there's nothing, because I've taken title to the goods halfway around the world in trust that everything goes smoothly on its little ocean-going voyage as it comes to Sydney, Australia, let's say. Then it goes into my warehouse, and then it depends. Then I start to try to sell it. Now, I may have sold it beforehand and it's delivered straight to a customer or utilized by a customer. And then it depends also on the financing terms that you're providing to your customer. Are you trading on them at advanced terms, or on 30 days, or on 60 days, or more in the case of some large corporates? And so you might have a cash-to-cash cycle only as an importer for 200 days. So you're financing coffee for 200 days before you get paid.
When you purchase coffee from an exporter.
Yes.
Help me understand this. Let me say it a different way.
I know where you're going. So if I'm buying coffee from an exporter, the general payment terms that I use are cash against documents. So the documents or the shipping documents are title to the goods within the container. So when I receive the original documents, I pay. So
even though you haven't seen the coffee?
Correct. Well, I've cupped coffee. I've done, say, pre-shipment sample analysis. I work with people that I trust and everything else, so I know. And there's other claims and mechanisms within contractual terms and conditions that give you the right to claim depending on how the cargo lands. But there's a huge amount of trust within the industry, but for us as a business, we pay basically straight away when it's shipped.
And that's
So
specialty though, right?
that's everything.
Even, okay, C market, everything.
So commercial qualities or specialty qualities, we're paying the exporter on a cash against document basis, basically within a few days of the vessel sailing from the origin.
If you're trading on the C market, you buy a contract, are the terms standardized, or can you set different terms?
They're standardized.
Do you know what they, obviously you do know what they are. What are the terms?
Well, again, so for me, I'm buying and selling coffee with counterparts. I'm not,
Okay.
the C market is a reference point for me. I'm not delivering coffee to the exchange or taking delivery from the exchange. So I only use it as a reference point. So we may trade and use the C market as a pricing tool. So I might be buying New York, Brazil, Santos quality, NY23 fine cup, and that's all jargon.
I was
probably.
like, wow, that just sounded like a whole other language. And
so that would be the C. So I may be paying level on the C market today, for instance. Yeah. So whatever the C market is, and I will do a contract with the other person. So we will agree at a certain level to price that contract before it gets shipped. They'll send me an invoice with the bill of lading and everything else, and I'll pay that.
Okay.
Well,
so we use.
Stephen, if I may, there are some variations in that from the standard. You could, for example, you could do FOB from the port. You can do X warehouse. There are different also terms of payment that could be done in the contract. If
Yes.
You could ask for a payment in advance. Especially if it's a first-time customer, or
correct,
you can give them up to 6 months to a year. And the difficulty that happens to us that are trading green is, especially when the terms start to get very long, when customers start to ask for, and that sort of negotiating power, and how big do roasters, when you have very few roasters dominating most of the market, they get to negotiate quite hard on the financing. So
yes,
we're seeing terms getting bigger and bigger.
And I'm assuming that that's adding to the cost of production.
Maybe not the cost of production, but that's the cost
of long-term costs of doing business.
The cost of doing business, and sometimes that changes your way of doing business because you're being financed. You need to find a way to be financed, and that inevitably may influence the way of doing business and the cost of doing business, because that may trickle down in different ways where the whole operation may be financed. Even the roaster may be financed. So the money is always short. In summary, money is always short.
Okay.
And then there are ways of tying a supply chain through money that do happen every now and then.
So now I want to ask a big question. It seems as though in the current situation that we're in, there's a lot of coffee, there's a lot of stress and anxiety happening at the back end with the farmers, but somebody's making money because there's a lot of money that's changing hands. So who's making the money here?
I think it's a very difficult conversation because, I mean, definitely for businesses like ours, we're continuing to have coffee go through us. So we're buying, we're selling continuously. We're never looking to hold coffee or anything else. I think the challenge within coffee sometimes is the impact of people trading on the C market from a speculative point of view. And if we look at the commitment of traders report that is sent by a broker on a bi-week, twice a week, let's say, it analyzes the positions taken by different segments of the industry, let's say, and that's one of the large challenges that we see, that a lot of people are looking to take advantage potentially of a good supply within coffee today. So people are selling coffee and waiting. And if you understand the mechanisms of a contract, you have what's called a forward curve. So the price for a September contract today, and then you can trade on a December contract. So the market is in carry. The market is happy to pay persons buying a December contract more than the September contract. So we can sell a September contract and we can then switch it to a December contract later. The market will pay us that carry component. Now, if we want to stay short and we want to trade that, we can wait. And I think that's what a number of people are doing. They're waiting on the short side of the C market and continuing to limit it to go up. Now, at the same time, there's no rationale why it should go up, because from a demand and supply point of view, there's enough supply. So nobody is going out there today to say, I need to buy more. And with prices going down over the last 12 months, we've seen value being driven by roasters buying scale down. So as the market goes down, they're buying ever more. They can buy a contract in 2021 today, and it's probably the same price that they bought coffee in 2017.
Doesn't that concern you?
It's the market. Well, you go, Felipe.
Yeah, sure. I think that, all right, so trying to answer your question, who's making money? The people making the money, they're either the ones gambling, and they can make money or they can lose money, right? If you're buying coffee, if you're a middleman, if you buy coffee low and you sell high, you're going to make a lot of money. But then you run the risk of buying high and selling low, right? So the nightmare of importers is buying coffee at, they bought coffee in October, it was, what was it, 130, and now it's at 90 cents. And they got a big inventory of coffee. But the so I guess the mechanism of the market, it does give a little bit of less, it's more conservative, right? It's for it's for if you want to hedge, you want to be risk averse. Now, I guess I'm going to say it. I mean, if you're at the selling end, at the final selling end, and you have a selling point,
selling green coffee or selling at the cafe, the roaster?
If you're selling to the final consumer and you have your price point, you're not going to go down on your price point. I've never really seen that happen. But you can buy less. So your profit, your cost of goods goes down, your profit goes up. So I guess in my view from what, from this, my sort of guess is the origin side of the supply chain is sort of has very little wiggle room as to how to sell. The middle part, they can gamble or not. And then the final side, some also can gamble or not. Some choose to hedge as well. But in general, you only see roasters stressed out when the price of coffees go up. You don't really see them stressed out when the price of coffee goes down or when markets get very saturated.
When you say the front end of the supply chain, if I read the very diplomatic way in which you tried to put that, Felipe, what I think you're saying there is that the front end of the supply chain is making most of the money and the back end of the supply chain is making sense on the pound, if that. Well, the middle part is making sense on the pound and the back end of the supply chain is typically not right now.
The middle can make a lot of money as well. I mean, that's what Stephen was talking about, speculators. I think there was a case in cacao several years ago. There's a big French trader who bought a large amount of the cacao produced in Ivory Coast or somewhere, which most of the production of cacao. And then there was like wars gone out in other countries. So he bought and stored a ton of cacao, and then the supply was strangled, and then he held that and then pushed the market even higher and sold and made a ton of money on that.
Is that legal? Is that not price fixing?
It's becoming harder and harder and harder to do it, as I think exchanges are becoming more and more and more prudent to enable them to be facilitators of trade, not enabling people to, let's say, corner a market and then hold all of the cards in that market and push it up to make a ton of money. So I think there's a lot of onus on exchanges to enable those sort of things to be limited. You look at a lot of participants within exchanges now have limits put on them, so they can only hold so many contracts, and the ones holding large amounts of contracts also have to justify why they need that many contracts. Is it for risk purposes? Is it for gambling purposes? Is it for what at the same time? So yeah, there are more questions asked over the last few years, I think, than ever before from an exchange point of view to help regulate and make them safer places to do business.
Who's doing the asking? If this is a self-regulated system.
Themselves.
Okay, so somebody...
They have their own bodies that will reach out to people to make sure. I mean, for us as internal businesses now, we have to do tests and everything else. So we understand all the regulations involved to be able to trade.
There's somebody, a regulatory figure. Well, I know that the sea market isn't regulated by anyone in particular, but is there like somebody who makes sure that everyone's playing by the rules?
Yeah, definitely. I mean, and we as a business have to have our own internal rules as well to make sure that our people are educated and everything else, and you don't have these issues that have happened over the years with Barings Bank and other things where people just continue to hide stuff in the back closet until it becomes too big and bankrupts businesses to a certain extent. So
well, someone's going to bail them out. Governments do that all the time now.
Yeah, well, you can look at the too big to fail sort of comments that goes on.
Come on now, I live in America. We know that everyone gets bailed out here.
Sure.
As long as you're big enough.
Yeah. The hard part of that is I think the only real way is competition, is to really regulate that, when keeping kind of the power spread out, keeping the buyers and sellers
but is coffee a free market? I mean, that's what competition is, right? Like competition operates within a free market. Is coffee a free market?
I don't know if we can answer that. It's not black and white.
What do you think, Stephen?
I think if we look at the mechanics of the market and the exchanges itself, it's a free market. The market is determining the price. There are heavyweights, I guess, that are pushing the price in a certain direction today. I think maybe though, if some demand and supply curves were different, then maybe they'd be pushing it in a completely different direction, and the price could be insanely the other way. at the same time. But I guess there's always aspects of a business that are not always black and white, as Felipe said.
I think the hard part in that is like the role of the government is to step in if you have companies that they're swaying how business is done because they have too much control, right? Or too much influence in the market. So what's a famous example? In the US, I don't know if you were in the US at this time, but AT&T had a giant share, or they were trying to buy, they were almost a monopoly or something. And the government stepped in and, said, this is not allowed by law. And so now you have several other phone carriers and keeps them a little bit more honest. In coffee and commodities trading, you have this international complexity of governments, of third world governments, of associations and lobbies, tax subsidies and things that when you're big, you have influence. And then a lot of the ones that are, I guess in the beginning, Stephen said the ABCDs, right? ABCD or whatever you call them. These big guys in commodity trading that control, and I don't know what the number is, but it's more than 50-60%, a huge percentage of how much commodities traded in the world. I think it's quite high. Who's going to step in and say, like the U.S. government stepped in and said, AT&T, this is not right. Who's going to step in and say that they're not right? It's like they're sitting in countries that are making them a lot of money. They're not really affecting their citizens. Why would, I don't know where these guys are, Switzerland, or I don't know who's gonna step in and say, you guys aren't doing, business the right way. When you're paying a lot of taxes, you're making us a lot of money. So, so that's, I don't know how to answer if that's.
No, I hear you. I think that it's far, again, like with everything else in this, it's just super complex. It's not, there is no simple answer to a lot of the questions that we're asking, which is hopefully something that we've demonstrated so far throughout this almost 3 hours worth of conversation. None of this is as straightforward as we would like it to be, right?
I think it's not, but I think it's changing. If I look at my own business and what my customers and roasters and consumers are asking for, I'm trading more flat price coffee than ever before. And I'm trading with exporters like FAF and other people where they're delivering value as opposed to just a commodity.
Right.
So I think we're at
separate from the mechanism that you used to have, correct? Sorry to
correct. So what's happening as an evolution of today is this concept of owning and creating meaningful, transparent supply chains, and creating not only a supply chain that is transparent from a coffee point of view, that's transparent from a price point of view as well. So we're working with a number of roasters, for instance, where we almost have an open book position,
right,
which is completely unheard of from, I guess, my corporate side or anything else. But some of the stuff that we're doing in Australia is really pushing the envelope on what's possible.
Is that through your SMS?
That's through SMS, but it's also
tell people what SMS is for those who haven't.
So SMS is not a messaging service. It's called sustainable
well
management.
done, you did a funny.
try to make sure that those people that have been here with us from the beginning keep working and keep entertained. So SMS is ECOM's version of sustainable management services. and we're almost at 20 years old now, from our birth in Kenya, and we continue to invest in farmers, training them with best agricultural practice, but also with business practice, with gender empowerment, and a huge myriad of things. We've built a platform that runs underneath that called SMS Integrity that we're trying to use, and I think we've got over 100,000 farmers sitting in this platform today, and more continuing to go into it. So we're driving data, and the goal is to work with farmers themselves to understand what's happening in their soil, what's happening in their yields, how can we deliver them better value from a production point of view, how can we then capture them and enable them to reach certain certification standards, where it's Rainforest Alliance or UTZ or organics or anything else. How do we help and empower people? And there was huge demand, let's say 5 or 6 years ago, from a lot of roasters to say that, yes, we're going to buy 100% sustainable coffee. That we, as a business, build a platform to enable that. That probably didn't happen as much as we thought it would. People sort of committed to certain targets, but maybe not followed through 100%, while others have. And I think their businesses and their brands have grown, but others have sort of said, is it creating value or destroying value for me? I don't know. I'll wait another 5 years and then I'll make a decision. So we're starting to see these sort of conversations come back in. But in the meantime, we've taken a leadership role as a business to create and understand and help farmers reach a better level of production and sustainable production, and drive value so they can manage their own lives better and continue to educate them and empower them.
With regards to that and accounting, on the front end of the supply chain, we see predominantly that cafe owners and roasters are coffee people before they're business people.
Yes.
And we see some unfortunately horribly shitty business practices. You know, people who don't know if they're profitable, they don't read or have access to their own profit and loss statement. They don't know what their cost of goods are. They haven't done cost breakdown analyses of these kinds of things. What I'm starting to understand is that we experience and are seeing the same thing at the back end of the supply chain. And I guess my question to both of you guys is this something that you're witnessing? It's absolutely something that producers are telling me, and having trouble admitting that they don't know a lot about accounting or how to run businesses. They just want to be coffee farmers. And the economics of what they're doing and the accounting of what they're doing is something that is quite disturbing to them. And they're realizing it's becoming more and more important. But literacy in some of these origins is not something that they're able to do, let alone keep books. What is your experience of that?
Yeah, well, I'll start with this one. I think coffee farmers are notoriously terrible bookkeepers and planners, and it's really hard to calculate cost of production, to be honest, because you're dealing with capital costs, you're dealing with risks. So you have very few people are able to calculate risk properly. And you know that the risk comes from so many different levels. It's environmental risks, it's theft, it's quality, it's somebody not paying you, it's
coffee rust, it's
coffee rust, it's the market going down, and then the dollar, the real crashing, so your tractor is going to cost you 3 times more. It's all kinds of stuff that And in Brazil, I got to say it's probably different than most places because we have some very professional farmers. We have about 60% small family farms, but we have some very, very professional farmers that know probably to the dot how much their cost of production is. But I think these numbers that people throw out, like, oh, the average cost of production in the world is $1.40 a pound. I mean, I would assume that they're probably huge. Their guesses, they're just total. They're based on numbers, but there's a huge range, and
yeah. And quality is going to dictate that as well, right? Like if you're aiming to farm, commercial coffee versus aiming to farm coffee that's scoring an 89, the cost of that production to be deliberately reaching an 89 is going to be much higher than a coffee that you've no fucks about what it tastes like because you just want to grow it and sell it, right?
A good example of that is labor. And I'm sure Felipe has got much better things, but if we look at a commercial pick might pick once or twice and then pick their whole farm, whereas a specialty person or a specialty farm is probably operating that they may be doing 6 or 7 passes through their farm to pick coffee and to be picking coffee at that optimum cherry ripeness level. And that itself is just an astronomical cost that is not even factored in half the time. I mean, Felipe probably has a better example of what he's doing, but I think that's a huge one that people just don't understand, of like the actual cost of picking coffee.
I'm hearing and I'm seeing on Instagram videos being posted of more mechanized systems whereby what they're doing is picking everything that's on the tree and having something at the mill that sorts them based on color quality. And the waste that's involved in that must be an astronomical hit that the farm has to take with regards to the cost of production. Is that right, Felipe?
I mean, you gotta calculate, right? You gotta sort of calculate the cost it's going to be if picking everything all at once and then picking 30-40% unripes, versus going 3, 4, 5 times and picking 80% ripe. How much you better have a specialty market to sell into if you're doing that. So there's some really interesting machines coming out, some really great machines that the machine can go twice, that you can adjust how much it shakes the trees. You can there's some electronic machines after, like you said, that pick out the cherries the day they're picked by color. And this is at the wet mill stage, even though most of them tend to be expensive and still very slow. I'm personally pretty excited about Chinese farmers coffee farmers, even though most people are afraid about China starting to produce. I'm kind of excited to see them get into production because they're really smart, hardworking, and there's innovative and tons of factories where I can foresee a lot of great machinery coming out of China in the future to help the coffee production go down. Yeah.
And this is where I say, and that was what I was alluding to before, this idea of, okay, we know we've got a lot of coffee. We know that the price of coffee is what it is right now because there's a lot of coffee around. If technology keeps driving us to have greater yields, and technology is just going to continue to get better, where there's a lot of investment worldwide going into what varietals are going to grow better at what origins, and all, like, there's a lot of things that are conspiring to having or maintaining a good yield of coffee. If we don't see the supply pulled back, and we do see a drive in the increase of the yields that we're having, is this going to become a greater crisis?
Yeah, I think it's inevitable that if the prices stay the way they are, then there will be a lot of stress. A lot of people will leave. I mean, I guess inevitably things sort of start to find equilibrium, right? That's sort of the guess. But we're going to lose a lot of some of the people at the most fragile levels of production.
The smaller farmers.
Yeah.
Okay.
And we're going to lose maybe potentially a lot of interesting, beautiful coffees and regions and terroirs. So, yeah, I think there's got to be some way to be a little bit more thorough with how you sell your coffee. You know, there's got to be a little bit more transparency in the communication of knowing where your coffee comes from, and that's the best way to sort of know that you're buying from some place that has a healthy supply chain.
So we just hit 3 hours, and in closing, I want us to close on a positive note. What do you think? And we'll start with you, Felipe. What do you think is the one suggestion of how we can have a positive impact that can drive the supply chain in a positive direction that starts to benefit anyone? You choose who you want it to benefit.
I think I would like to see specialty coffee communicate in more than just a cup score. I think there should be more ways because we run the risk of commoditizing specialty coffee, and without going much into it, there's sort of a history of specialty coffee growing out of trying to find solutions for a lot of the issues we're having. So I would love to see specialty coffee grow even more, and these roasters be successful, and then they have to do that by educating their consumers and being transparent with the supply chain. So
How about you, Stephen?
I mean, similar points. I think the key continually for me is at the moment education. I think we need to continue to benefit first and foremost the farmers and ensure that they are adopting sustainable practices, but also they have better options for markets to enable to get the best price for their coffee. And we need to continue to empower roasters to wanting to create meaningful change, and consumers. I think one of the biggest things that we need to do is maybe be more meaningful on how we communicate, how we serve coffee, because how we serve coffee is still commoditized to cappuccino, latte, espresso in a way to the final consumer. And there's so many amazing different coffees out there that we should be pushing that to the consumer so they can make an educated choice and have an amazing Brazilian specialty coffee, but pay the right price for it and make sure that price finds its way back to the farmer.
And I guess from my perspective, what I would like to see is more conversation between people who don't typically have conversation around all of these subjects. You know, I'd love to see coffee producers talking more to cafe owners and more to roasters, whether it be, over WhatsApp or through social media. I'd love to see conversations like this, see market traders talking to people who are working in cafes and have that relationship formulate. I'd love anybody who needs to be a part of this conversation online on this podcast, put your hand up and show up. For the people who should be a part and have turned around and declined the invitation, reconsider, because until we are having these conversations, and it's normal for people to have these conversations, and, you know, be brave in admitting that, look, this is broken. It works for some people. It's clearly not working for others. But we're not going to fix anything with any long-term effects if we're not prepared to at least show up to the conversation. And for simply that reason, I want to congratulate both of you guys and thank you with much gratitude for being brave to show up to this conversation with such humility and such bravery. So thank you for that.
Thanks.
Thank you.
And on that note, thank you for an epic 3-hour conversation. Have an amazing rest of your day. Bye, everyone.
All right. Bye.